Most chart teaching obsesses over bottoms and tops, but the real money is made and lost in the long phase between them. Today we read one complete bullish recovery from a grinding descent through the moment character flips to the climax volume signature that quietly marks the end of the cycle, candle by candle. The chart opens already falling, a sustained sequence of lower lows printed in patient stair-step fashion, each new low followed by a small bounce, then a deeper low. This is distribution, not panic. Supply delivered slowly, and the buyers stepping in at each new low get overrun. The urge to call a bottom here is exactly what gets punished. Counting lower, lows never finds a bottom. Only a structural shift does. After the lowest low, price produces its first real bounce, and it prints a lower high. By itself, that means nothing. The market just took a breath. But watch the volume on this bounce. The buy-side bars are noticeably larger than on any earlier bounce in the descent. That asymmetry is the first faint hint that real buying may be entering. Not confirmation yet, but enough to put you on notice. Here is the moment everything changes. Price climbs back and closes above the prior lower high. The blue line marks the change of character. The distinction matters. A pullback in a downtrend makes small green candles that fail before the prior high. A change of character closes above it with conviction, and the volume confirms. The candles making this break carry visibly larger green bars than any bullish move in the entire descent. That is the institutional buying signature. Now look at the teal lines near the bottom, the order block. Here is the detail almost no one teaches. This zone formed at the lowest low before the change of character happened. The institution that absorbed supply here was bidding into the descent, not after it. Their entry was already complete by the time structure confirmed. The change of character is the public announcement. The real entry was earlier and lower. From a change of character, price drives up in a clear bullish impulse and prints its first higher high. The candles are visibly larger than the pullbacks around them, and volume is meaningful. The structure has now committed to bullish. But what follows surprises most readers. Price doesn't continue smoothly up. It drops sharply, almost back to the order block, to a beginner that looks like failure. It isn't, and the next phase is why. Price drops hard from that first higher high and pierces back into the order block on large red candles. To a beginner, the thesis looks broken. It isn't. Look closely. The wicks pierce below the zone, but the body's close back inside. Rejection, not invalidation. And the volume is moderate, not capitulation-sized. This isn't new selling, it's late buyers being shaken out. The reaction off the level is sharp. This retest is the second chance entry at a deeper price with confirmation the zone held. From the retest, the markup unfolds the longest structure on the chart. Higher high, pull back to higher low, higher high again. The stairs repeat with obvious consistency. This is the textbook markup phase that textbooks rarely show in full. But notice the pullbacks getting shallower as the trend matures. That tightening cuts both ways. It signals strengthening buying, but trends that become too smooth, with pullbacks drying up, are often approaching exhaustion. Through that markup, the volume panel tells a second story. The up leg bars stay larger than the pullback bars, healthy, but the absolute size of those up leg bars is growing. Each new higher high tends to print on slightly more volume than the last. That is accelerating commitment. Buyers not just holding the trend, but committing more capital to push it. And accelerating volume cannot continue forever. It is building toward a climax. And there it is, toward the right. The volume panel prints the largest single bar on the entire chart. It dwarfs every other bar in the markup, and it lands at a late higher high, near the peak. This is climax volume, the most reliable end-of-cycle signal there is. Late buyers chasing, institutions closing, both transacting at once. And the candle that makes it closes well off its high. Aggressive buying met aggressive selling at the top, and the sellers won the close. After the climax bar, the structure changes character. A pullback deeper than any recent one, then a recovery that fails to reach the prior high. That failure is the warning. If the next move down breaks the prior higher low, the trend has structurally broken, the bearish mirror of the change of character that began this chart. The reader who saw the climax volume reduced exposure here, before structure confirmed. The reader who waited for the lower high gave back much of the move. 3 things to carry from this chart. The order block forms before the change of character, not after. The institutional entry was at the low during the descent. The retest of that order block is often a better entry than the change of character itself. Deeper price, tighter risk. And climax volume. The largest bar, near a structural high, closing off its high, is the cleanest end-of-cycle signal there is, and almost no one teaches it. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.